Good evening, everybody. It's Saturday, June 19th, and I want to go over a few different markets. I'm going to start by saying I did take out at a PAS, GLD, and SLV options positions that I had. I wound up making about a 15 to 20% return on all the options. It probably should have been a little greater if I didn't just buy the options. I bought call options when the VIX was high. And basically what happens is when you do that, if the volatility drops a lot, so you lose the volatility premium, so you're losing value there, but you're gaining value because the stock is going up. And I also lost some time value because it took a little time for some of the moves to play out. Noticeably the Pan American Silver, because that was a July contract, and it only had a month to go. So I took some profit. It was getting overbought, and silver still hasn't taken out the key resistance area in the 1950 to 1975 area. So there's nothing wrong with taking some profit. I wound up going into SPY puts for August, and right now it's a short-term trade. It's kind of speculative, but I think the market could be at a key top area right now. There's a few indicators that were really worrying me. Noticeably the VIX, it actually hit the 100-day moving average, and that's the volatility index, and it's been pretty much in a straight down decline for the last 10 days. And the volume in the market on the upside has been pretty bad, and fundamentals have also been really bad. We've had bad retail numbers, we've had bad job numbers, bad housing numbers, which isn't really a surprise, but the market's been pricing in a lot of perfection. And I was looking at a lot of retail charts. The retail sector looks like it's really ready to correct big time. There's a lot of ugly looking charts in the retail index, and the banking sector too. Throughout the bounce of the last few weeks, the banks like Bank of America, J.P. Morgan, Citigroup, Goldman Sachs, most of them have not participated at all on the upside, and they actually look like they could be forming bearish consolidation patterns to head down lower. Now, in the area that we stopped at on the SPY, where we are right now, we're overbought on a daily time frame. We just had a bearish cross of the 45-day going below the 100-day on the SPY. And like I said, you have that VIX hitting the 100-day. It's also in a bullish falling wedge pattern, which I'm going to show in a little bit. And like I said, this BP situation, I don't think this is going to be resolved anytime soon. And I believe that BP is going to be in a lot of trouble. I think the stock is heading much lower. I might actually look at possibly getting involved with some puts on BP. But right now, I'm sure the premiums are pretty high, so you want to wait for the right opportunity. Right now, there's a bullish MACD crossover on BP, so I would wait a little bit. But I think that stock is heading much lower, and the energy sector along with it. Now, Obama has been before they were trying to pass the carbon tax regulation. Basically, it's an energy tax across the board. It's going to pretty much tax almost every facet of human life, and this disaster, you're already starting to hear the rhetoric out of the White House that they're going to try and push their carbon tax again, which was very unpopular back in the December period when the hackers exposed the emails, basically exposing that Al Gore and some scientists were manipulating data to support their theory on global warming. So if you get a carbon tax, it's going to, some people are estimating that would cause gas gas at the pump to be $6 to $7 a gallon, and that would really, that would just totally destroy the economy. But if that goes through, or we're gonna be going much lower in the markets, and probably quickly. I'm not really trading off of that, but basically this BP disaster is definitely something that's going to weigh on the markets, I think, over the next few months, because it doesn't seem like it's going to be resolved, and the disaster there is like of epic proportions, and there's going to probably be a lot of human and ecological disaster coming out of the area. It's a shame. It's a beautiful area, and a lot of people and animals are going to be affected by it. So anyway, I'm going to pull up some charts here, and the first one I'm going to try to look at is the volatility index, which is the dollar sign VIX. And here's my chart on the VIX. It's a daily chart, and you could clearly see this pattern right here is called a falling wedge. And what a wedge is, you could clearly see this as a wedge right here. It's basically a triangle with basically you're meeting here at the apex. So you should have basically when you see this pattern, if you see it on the upside or if you see it on the downside, it's basically saying that the trend is near that you're near a potential reversal point, that the trend's getting a little tired because it's narrowly going down still. So as you see there, the green line is the 100-day moving average, which is 23.36. The low on the VIX was 23.30, so it went a little below it, closed at 23.95 on Friday. Even though the market was down a little bit, the VIX was also down. So as you can see here, I mean, you have the the MACD broke down. You could clearly see MACD was here when the market was there, and you've broken down pretty hard. The histogram is still actually had another negative bar here, and but the momentum is clearly slowing as you see this flattening out. Stochastic is very low. I mean, you have a 3 reading on both, so it is embedded to the downside, which is dangerous. But this is a volatility index, and basically this measures the fear in the market. And as you can see, over the last couple weeks, it's taken a pretty big nosedive. Okay, I'll pull up some other charts here in a second. Then the next chart I'd like to look at is the SPY 1-year chart. Actually, this is the actually, I'm going to go over to the SPX, the dollar SPX, the futures contract of the S&P 500 first, because I had a good chart on here. As you can clearly see, there's a downtrend resistance line which we're running into, which is a little over 1120. You just had a bearish cross of the 45 going below the 100, which is very bearish, and that's around the it's 1132, 1133 area. The 45 is 1132.15. The 100 is 1133.28. So that's going to pose some resistance. You also have the Bollinger Band, which is 1127, the top Bollinger Band. You had the histogram is actually flattening, and you were very overbought with the stochastic, and it's turning here. It hasn't crossed down yet, so there's no bearish confirmation, but you're at an area where there's considerable resistance, and I believe that we are going to head lower soon. I believe that the market was kind of held up these 3 days. You can see there's tail. The market did try to go lower, and it just kind of tried to go higher. It wouldn't really go higher. It just kind of was flopping around Wednesday, Thursday, and Friday. And it was options expiration week, so I believe that and the maximum pain for the SPY was 112, and it closed at like 111.73. So option writers tend to be the big boys, and a lot of times if they can, they will park the price of the security at a level that pretty much wipes out the majority of the options players, so they can collect the premiums free and clear. So